dealing with respected subfields of finance. So proceed.
Thank you, Joe. So thank you once again, everyone, for coming. And the subject before us this afternoon is the future of blockchain and finance. Now we see things like crypto assets and blockchain-backed technologies can very well make our societies, our economies more efficient, secure, and autonomous. However, in this panel discussion, I want to go deeper and find out if blockchain can really do all that for society, and if there's a hidden social or economic cost to it. And with me are the four speakers who have just presented. Let's give them a warm round of applause. All right. So I want to start with Dr. Mardini. Yeah, so you mentioned in your speech that, with all the Great Depression of 1929, dot-com bubble crash, the subprime mortgage crisis, the European debt crisis, what do you think after so many years we still haven't got it right? Is it our governments? Is it the lack of government intervention? Is it the natural occurrence of economies? What is it? Maybe you can share.
Again, can you hear me? Can I use my actual voice back? Yeah?
Use the microphone, otherwise this will have
yeah. Okay, now it's working. Good. So I would say it's temptation, right? The devil is very smart. I think that every politician who comes into power would love to see the economy booming during his mandate, and he doesn't really care what will happen afterwards, right? That's why today interest rates in the US should have been much higher, and we are not increasing them. And it is purely because of economic pressures, because we know that low interest rates will create a boom, and that's what we're having today, right? We have 4.2% of growth. This was the last estimation. Why would we want that? Why would a politician want growth? Well, to get re-elected. And what if it will produce later on a financial crisis or an economic recession? Well, who cares? He will be out of office, right? So every politician have the same temptation, and this temptation would lead to doing the same thing over and over.
Right. Christian, you want to share your opinion on that?
I would say that it's due to the fact, as I said, politicians will do that as long as they can, because that gives them power.
Maybe you want to share?
So the question is, why have we not gotten it right? And
yes, like why after so many financial crises we still haven't, gotten like as an economy we still haven't really like resolved this issue of bubbles and crashes and.
Right, and I guess if you take Bitcoin as a sort of response to the financial crisis, right, maybe that is that sliver of hope, right, and maybe you can make the argument that technology has always been there, but the growth of it might be more exponentially empowering more recently in terms of what it can do, how it can engender that separation of powers. And so maybe technology was not robust enough in the olden days, and now we're getting to that stage where it could really sort of take off and decouple from regulation, maybe?
Right, okay. So coming back to Dr. Mardini, in your opinion, will blockchain and cryptocurrencies, will it help actually stabilize the economy and kind of end business cycles or recessions or financial crisis? What do you think?
Well, we never can guess the future, right? It's very hard to say where we will go because things are evolving very quickly. In the current state of things, if we were in a fixed environment, I don't think that Bitcoin will have an impact on like changing the way that people contract loans or take deposits or pay their grocery, right? I don't see it there. However, it will all depend on entrepreneurs, right? I mean, if we have a very smart entrepreneur who would find a way to accept deposits, give loans in Bitcoins, and guarantee the repayment of those loans, I mean, that's what would lead to more sophisticated contract that would eventually make the cryptocurrency money. But now in the simple, I mean, you know, if I lend you, imagine that I lend you money using Bitcoin, right? I lend you 2 Bitcoin. Well, first you are anonymous. I don't know who you are because I'm doing it, you know, on the internet, right? Nothing would guarantee for me that you would return those 2 Bitcoins for me. And some people would say, oh yeah, but that would be bad reputation, right? If you don't return them, then nobody would lend you money again. But you may have like 10 accounts of Bitcoins, and who would know that those 10 accounts are for the same person, right? So it's inconceivable to have a working financial system with Bitcoin as money in it. Now, we can imagine a system where basically me and you, we agree that you would reveal your identity, right? And you will have 2 witnesses, and I will lend you money, and those 2 witnesses will guarantee that, I mean, you took money from me. So this part of the problem is resolved. It can be resolved, no problem. But then when it will come to payment, you need to pay me back. Why? What if you refuse to pay me back? Can I put you in jail? Well, I need to ask the government to put you in jail. So I really need the government. Now you may say, oh, but I can hire a private protection company. But imagine that a private protection company takes you, puts you in jail. That would be kidnapping, and the private protection company will have a lot of trouble, right? So as long as we don't find a way to enforce contracts in Bitcoin, Bitcoin can only be a money transfer device, but you cannot have those sophisticated contracts that we use with money, right? Now, we are really waiting for good entrepreneurs to create a new revolution and allow those sophisticated contracts, but we are still waiting.
Right, okay. So just out of curiosity, who here in the audience has like some investments in Bitcoin or some stuff to do with Bitcoin startups, ICOs, whatever? Okay, so quite a number of you. So really believe in this whole idea, but I want to try to kind of probe, with all the benefits of Bitcoin, what are some of the risks involved? So Thomas, you mentioned that you don't believe in private blockchains, yeah? And we know that blockchain provides data security for financial services or any kind of service, but traditional institutions like banks and fund houses, and even statutory boards like Singapore Power, PUB, they will most likely not put their data on public blockchain servers voluntarily, especially with the GDPR, the Facebook privacy questionings, even the recent SingHealth data breach, right? So how do you think such a dilemma will kind of play out and resolve when the time comes about?
To be honest, I find it hard to understand question. Yeah, they won't put the data on the blockchain for a good reason. The moment it's on the blockchain, it's especially public open blockchain. The moment it's there, it's distributed. Even if you encrypt it, you expose it to flaws in the encryption. So they shouldn't. But that doesn't mean that they should run private blockchain, because when they run private blockchain, what they are running is slow and expensive database. So we need to understand where the blockchain solutions apply and when they don't. They don't apply to data protection. They don't apply to data storage. It's a very inefficient way to store the data, a very expensive way to store the data. Where they apply is when you want to remove trust, when you want to create digital scarcity, and when you perhaps want to avoid government regulations and exposure to government forcing you to shut down. Neither of those is really the case of the banks. It is the case for the private monies. All the previous attempts to create private digital monies or medias of exchange were shut down forcefully by the government, and the people who came up with those solutions were put to jail and often sentenced to long prison sentences for doing nothing wrong, for for doing no violence, for not hurting anyone. So for these solutions, blockchain is where it can apply, and when we come back to Bitcoin as its first application, I am dead certain that cryptocurrencies will become the money of the future. They're not, granted, they're not the universally accepted media of exchange by any stretch of the imagination right now. I'm dead sure they will. Whether that'll be Bitcoin, I have my doubts. I'm betting on something else, but I am betting my livelihood and my career at this point at this fact, because my current business that I'm launching is in bringing this future about, and in bringing cryptocurrencies and Bitcoin Cash in particular to daily to the daily life of every users.
Okay, yeah.
Yeah. So just speaking of digital currency, right, I think this is where Dr. Mardini, your expertise with regards to the quantity theories of money, right, can really come into the tokenomic side of things, right? How do you create some of these deflationary measures within when you're like minting your own coin, and I think that's where you can make the link to cryptocurrency as well. And then back to the question about why would SP Group put their data on the blockchain. I think it's true that they wouldn't want to do that, but there are new mechanisms like zero knowledge proofs, right, where you can basically verify the accuracy of data without actually knowing what it is. But then obviously there are issues of transaction costs and delays and things like that.
So to that question, there is a lot of computing and processing power that needs to be involved in putting all those data on the public servers, right? So we know that looking at the global kind of Bitcoin mining operations, for instance, over half is currently controlled by a couple of big Chinese corporations, N-Pool, F2 Pool, BTC China Pool. So will the growth of blockchain and also hence the rising costs inadvertently spark the opposite result, which is centralization instead of its original purpose?
May I pick this up?
Yeah, sure. Go ahead.
So none of that is true.
Okay.
The Chinese pools don't control the mining. The Chinese pools merely lease the hardware for others to buy. If the others, thousands and thousands of users around the world, wouldn't lease that hardware, wouldn't pay the Chinese pools, and they're not only Chinese, let's make that clear. They're all around the world. If they didn't pay them, then they wouldn't do it. So it's in fact investors in those pools and those who lease the hardware who are in control, and those are thousands and thousands of users around the world. So I disagree with the centralization. I also disagree with the notion that it is high in the consumption, because what is happening right now is a consolidation of the security of the network. The miners merely compete for the reward to make the network secure against the external attacks, against the takeover. And the more people trust that network, the more value they put in it. The important thing to understand is that the fixed cost of running the network is high, but the marginal cost of every transaction in an unhampered network is tiny. So if we end up having millions of transactions happening on the network, the marginal cost of every and each of them is very small. And if you compare the consumption of that compared to what happens when the governments run the printing press and how much waste they create through malinvestments, the apartments nobody lives in, the cars nobody's driving, and the resources that are wasted, the consumption for what is honest, inflation resistant, government resistant money that proportion is huge. The waste that government causes with the malinvestments are much bigger than any consumption that Bitcoin will ever have.
Well, would it still lead to kind of like a consolidation of operations, mining operations, or crypto mining operations, such that it becomes a centralized kind of community by itself?
I don't see a reason. As long as it's permissionless, as long as anyone can enter the space, which they can, all of these networks are permissionless, and no one would put their money in. No one sane would put their money in something that is not such. Then we will have a lot of competition for the mining. And the fact that we have a few pools, they do it very well, they do it very efficiently. That's why thousands of people around the world lease their hardware from them. But it's still those thousands of people behind those pools who are, and it's not thousands, it's probably tens of thousands, and it'll probably be hundreds of thousands who are behind that. Those pools don't control it. The moment they try to mess up, that moment they lose the customers.
All right, thank you for comments. This one's for Dr. Mardini again. Do you think with a decentralized information system such as the blockchain technology, do you think governments and corporations see it as a threat or an opportunity for them?
Decentralization resolves many problems related to a central entity doing the job and sometimes abusing the job. So I actually joined what my colleague was saying earlier. So we can probably think about many applications where today we have a kind of monopoly doing them and not probably doing a great job. Now, what are those applications? I don't know. We rely on entrepreneurs to discover them. But anything that you see a monopoly doing it and probably abusing the work, that might be an interesting application for it. If we can trust the software rather than trust human beings that might make mistakes or might have bad intentions, all of that is good. But I would try to highlight another point here, which is that the current monetary system has a lot of problems, and I retraced them, right? About how it creates booms and busts, how it creates inflations, and how the money sometimes created is giving out to some people who don't really deserve it, in bailouts, for instance, right? So we have a very bad monetary system. Now, this does not mean that Bitcoin is the right monetary system, right? So the fact that our current system is not efficient, it does not mean that any other alternative is more efficient. It may be, it may become. We hope that it would become one day. But today we don't have the proof for that, and I would like to stress this point.
Right, and you mentioned because of the printing of money, then it leads to the declining value of the dollar, right? So one question, like in traditional economics textbooks, wouldn't you say that inflation is good? Inflation helps grow the economy, grow the GDP and stuff like that. So what's your take?
Inflation is very bad. Inflation makes people lose their savings. Inflation, if you are hit with inflation and unemployment at the same time, you would lose your job and things will become more expensive. So you will be double hit, right? And usually, in the past with an economist that was mentioned by Victor earlier, John Maynard Keynes, which is a very bad economist, but a very influential, unfortunately, a very influential but bad economist. He said, you know what, print money, that's great, you will have growth, right? And he's right. I showed it, right? When we print money, we will have more investment, we will have growth. And we asked them, but what will become later on? When, on the long run, when those investments shows to be bad investments. Well, he said, you know what? I don't care about the long run. I will be dead over the long run, right? So he probably knew that his policies were wrong. Some people they call themselves Keynesians, would argue that inflation is good because when you print money, you create inflation, and when you create inflation, you create jobs, right? But it has been proven to be wrong on the long run. On the long run, when you print money, you will have both inflation and unemployment. We saw it before the Volcker's year in the US, and that's why we discovered that actually inflation is a disaster. People lose their jobs, people lose their houses, people lose their savings, and everything will become more expensive for them, and it would lead to very bad things. So no, I don't think that inflation is an objective to pursue. I don't think that the central bank should pursue a growth investment, a growth or jobs, I mean, the central bank should just keep the prices stable and let the real economy function, let people save money, invest them in the right way, and grow the economy based on solid investment, not on artificial helicopter paper money.
Thank you, Dr. Martini. So coming back to you, Christian, do you think that blockchain and cryptocurrency is a double-edged sword? In terms of, you know, with data being spread around, and then governments could actually capitalize on that data and just make it their own, and so that they can better manage communities and
I'm pretty
industries.
sure that the next thing that will happen is that governments will introduce their own cryptocurrencies to us, and use it. And if you're really dumb, you will think that's great, because they will install the same problems as in the money right now, with inflation and control over that money, etc. So the good thing about crypto, etc., is that it enslaves us from central banking. And if it works and if it solves the inflation problems, etc., that has not to be answered. The only thing is that if you don't want it, if you don't want to use that money anymore, you can. And then people have to find solutions and try different approaches.
All right. Okay. So now I'm gonna ask one last question before I hand it to the audience. So, audience, please think about some questions that you can pose to our guest speakers. So my last question would be, you know, some of us might know that in March this year, Walmart just filed a patent for autonomous robot bees. And China last year implemented a social rating system called Zhima Credit that combines individual personal records, financial records, social data, where you could, if you had a low score, you could be denied things like housing and cars and public transport even. So are we seeing an eerie manifestation of a Black Mirror-like world? Some of you might know what Black Mirror is. It's kind of like a dystopian world where technology actually runs out of control. Yeah. So, will you like to?
So just now I was talking a bit about prediction markets, right? And I think Thomas also alluded to it. So prediction markets, are fairly interesting in this context of futarchy, where policy decisions are made just based on betting. Something interesting that has happened, which goes to this Black Mirror stuff. There's this Ogre platform, right? That's currently built on Ethereum, and they have recently launched their prediction market system. And what recently has sort of emerged from this is assassination markets, where you basically have people betting, in the year of 2018, Donald Trump will die, and you can see the sort of perverse incentives that can come from these sorts of assassination markets, where might really deviate from the original intentions. So yeah, Black Mirror scenario right there, or maybe it's a good scenario. I don't know.
Only time will tell, right? So anyone else? No. Yeah.
So I think the real question here is to know whether the system is voluntary or forced. In the case of China, you don't have the choice. You are screened, and it's not the computer that is actually manipulating your life. It's the government behind the computer that is controlling everything, and that's the real problem. Now, we do have today many rating programs. You know, when I want to go to the loan, to the bank to take a loan, I mean, we have many screening process, many rating process, and this is something I accept voluntarily, right? I accept that some company would come in and rate me and give me a certain score, because I know that through this score, I can get a lower interest rates on my loan, and I would accept that voluntarily, and that's good, right? We have today universities who ask for accreditation, and what is accreditation? It's a private company coming in and rating you and telling you, you know what, you're good, or you know what, no, you're bad, you should not receive, and the universities are doing that voluntarily, right? And you have a lot of restaurants, they register to those kind of, what do you call them, inspectors, private companies that would come in, taste the food, make sure that you are delivering what you're promising, right? If you're saying that you're putting pork in your dim sum, are you really putting pork or not, right? And all those rating, so the idea of rating is not that bad. It's something good. It gives information to the market as long as it is done voluntarily. However, when the government is controlling it, that's very bad, because the government does not only force it on you, the government has also the monopoly of violence. They can catch you, they can put you in jail, and they can use this information for political reasons, and you don't want that.
All right, anyone else wants to add? If not, I'll move on to the audience question. So yeah, now we'll open up to the floor for questions. We can take about 2 for now. If you have a question, please stand on either side of the mic, state your name and your question, and which panel or panelists you'd like to answer the question. So anyone?
To Dr. Patrick, I would think that the creation of value is the positive thing in any economy. How did we get so disconnected and believe that inflation? I mean, I understand an elastic money supply where there's new money to account for this new value. How did we get so disconnected where inflation was good in and of itself, completely divorced from the fact that there may or may not be any new real value produced in the economy? Can you please discuss that point?
Yes, of course. Now, this is a very old mistake that we've done throughout history. The mercantilists did this mistake by thinking that money is a real value. So they thought that if you accumulate more money, it means that you are wealthier. But in reality, it's not the money, it's what you can buy with this money. And if you cannot buy a lot of things with this money, if this money is losing its value, you are not wealthier at all. Actually, you are losing value. So yes, I agree. It's tricky. It's true that when I am a university professor, I stand up, I teach, and my university gives me money, and this money would allow me to buy things, right? But actually what I am doing, I am trading my teaching services to food, dim sum, right? Or beer or the other things that I consume. So in reality, goods are traded against goods, and that's the beauty of cryptocurrencies. We can imagine a world where basically I am a company, right? I pay all my suppliers in cryptocurrencies, and they accept it because they know that they can pay their employees in cryptocurrencies, and those employees will come and consume my products using cryptocurrencies, and it's a whole cycle that does not need the government, right? So theoretically, it's a very nice thing because goods are traded for goods and you don't need money for that. How do we get to those crazy ideas where basically we can create wealth by injecting money? It's an old theory called the seen and the unseen, usually developed by Frédéric Bastiat and other economists later on. And the idea is that when the central bank prints money and give it to you, you see that. And you go and you buy a house and you're happy and you use it to invest. And that's really cool, and everybody see that, and that's great. However, what we don't see is that when I print this money and I give it to you, I am taking this value from other people, and those other people would have spent this money in a different way. So actually, I am not creating value by printing the money. I'm just taking it from them and giving it for you.
Anyone else want to add? Yeah.
Yeah, and I think in the world of cryptos as well, you you can have these deflationary measures like token burns, right, which makes it easier to have more value, basically, right? You can very easily send tokens to a burn contract and just delete them off the face of the earth, and that, you know, increases supply and theoretically increases price and what you can buy of it as well. And this coupled with the visibility of tokens, right, allows you to just go down to, you know, 18 decimal places, and that's also very helpful.
All right, we'll have the next question.
It's for Mr. Christian. Thanks for your presentation. Enjoyed that.
Thank you.
Yeah. Have you heard about the sort of disputes about the label anarcho-capitalist? And to me, the suffixes on anarchy are redundant, because you're either an anarchist or a statist, basically. You either have a leaders or follow leaders, or you don't. And you don't need to have suffixes that give you different definitions after that, because if somebody isn't imposing on you, you can make your own choices about what you do. So you're essentially an anarchist. And as a corollary to that, are you familiar with Konkin and counter-economics?
With
Konkin.
no, I even don't.
Counter-economics. It's support of the black and grey markets, so that you can actually undermine the amount of revenue that goes to government through taxation and so forth by supporting what are considered by government to be illegal markets. You can only do that through something like cryptocurrency, as far as I'm aware at the moment. So I would say cryptocurrency is a very useful tool if you're an anarchist. If you've got any comments on that.
Yes, it is. That's how I said. You have alternatives. And I know many people that only live by crypto. And these people travel around the world, maybe do not pay taxes or whatever, and they decide on their own. They really live in a parallel system. So they really live like anarchists.
Thanks.
Cash?
All right, we got one more last question.
Travelers.
Hello. Yeah.
That's a buzzword, if you want to know.
So, hello, I'm Raphael. The conference today is about the future, and we are here to imagine. So, if you would imagine an ideal financial system, like, can you pitch it in like a short time? What would it be like? Competing currencies, no central banks. Can you describe it? Yeah, any of you who wants to take that?
I would say that it's unregulated and that it has competition, especially in currencies. So that that there is no entity that is free from competition as we have it now. So that's and everything else follows. Very easy.
I might add a little bit. I totally agree. The ideal, I don't really want to draw it because I don't want to play a central planner. I want I guess the closest would be the concept of free banking, and basically it means unregulated, unmandated framework of financial settlement, currencies and banks. And I'm big into cryptocurrencies, but I also appreciate the role that gold has historically played, and I believe will play in the future monetary system, and maybe other precious metals. I want to see competition to make sure that I want people to be able to choose what they want to transact with, and I want the best solution to win. I believe the best solution are cryptocurrencies, a couple of them, but maybe I'm wrong. Maybe it's gold, and maybe they will exist in parallel. I am sure it's not fiat money and US dollar or Sing dollar.
All right, any last words?
Just to answer,
Sure.
Dim Sung,
That would no, I'm just kidding. I don't know what would be a good system. If I knew that, I would have opened my own company and became a millionaire based on that. I just can put general idea. I mean, we need a system that would prevent the issuer from printing more money. I believe that competition can do that. And we need a system where the government can guarantee the payments, right? So you cannot have a system against the government. Because the government still have the monopoly of police, right, and of violence, and you need that. So what kind of innovation? I mean, I can imagine today if the central bank just stopped, if we delete it, stop printing money, and we just keep the quantity of dollar existing, then banks will use it as a reserve money and they will issue their own money based on this dollar. The real problem is that the central bank is playing with this quantity of money. So should it be a computer? Should it be a private bank? Should it be a shop? Back in the day of free banking, you used to have like the company of wool and banking. You used to have the grocery and banking. Everybody used to offer banking services, right? The real problem in the current system is that the central bank is manipulating the base money, and we need to find a discipline for that. And only entrepreneurs can do that. So actually, I'm waiting answers from you.
All right, Willie, do you want to? Okay, yeah. Just to bring.
Sure. Yeah. Just very quickly. I think it definitely depends on the level of technology as well in the future, because right now, even for Electrify Asia, we're working. We still have to work within the boundaries of physical constraints, right? Like the main grid. You need to lay down these cables, and then you have to send electrons through these cables. But if technology advances to the point where electrons can be sent from point to point and manifest, and they can record all of these things on the blockchain, then you can also move towards a more genuinely decentralized kind of future. Yeah.
All right. So thank you for sharing. I think we're out of time. Thank you all for your sharing your insights. Please join me in thanking the terrific, engaging, spirited panel: Willie Khoo, Christian, Dr. Mardini, and Thomas. Thank you. So right now we're taking a half an hour break. Half an hour?
We will be having a 10-minute break, so come back at 4:10 and we'll carry on with our next segment.